There's an Indian company that's quietly woven into the everyday lives of billions of people, from a small startup company to a $30 billion entity. This company has changed how India eats, shops, and lives. In this video, I'm going to share with you who this company is, the brands that come under them, what are they doing, how are they growing this fast, and more importantly, from an investor standpoint, what does it mean for us? And whether you're watching from India or outside India, I'm going to tell you how you can be part of this story as an investor. Hey everyone, my name is Niranjan. I've been investing in global equity markets for almost 20 years. I have 2 degrees in finance, and it's my goal to achieve financial freedom through passive income. And I'm here to take you on that journey with me. India is one of the fastest growing economies on the planet, and a lot of people want to ride that wave. The company that I'm going to talk about today has been a part of that wave. It's taken advantage of the rise in consumer spending and the increased economic prosperity in India. The name of the company? Eternal Limited. Eternal's story is absolutely fascinating. They are the holding company for brands such as Zomato and Blinkit. These 2 brands have essentially become verbs in day-to-day Indian life. If you're outside India, think of Zomato as the Indian cousin of Uber Eats, DoorDash, Volt, Glovo, or Delivery Hero. And Blinkit? It's the grocery app that delivers not in days, not in hours, but in minutes. I once had my own groceries delivered in under 6 minutes. I'm not joking, by the way. They also own Hyperpure, which supplies fresh ingredients to the restaurants from where customers can order stuff. So essentially, they're trying to capture the entire supply chain. Another part of their company is a brand called District, which creates community experiences. These experiences are focused on retail platform and lifestyle. Together, these brands give investors a front row seat to the pulse of India's consumer economy. In fact, it's my belief that a company like Eternal can be a good gauge to see how is the consumer sentiment in a country like India. Now a quick history lesson. Zomato's journey started way back in 2008, where it wasn't called Zomato or Eternal. It was called Foodie Bay. Foodie Bay was a simple restaurant menu where you could go online to the website and look at the menu of your favorite restaurant. In 2010, Foodie Bay was rebranded as Zomato, a food delivery company. Zomato even expanded to about 20 countries short after that, but more on that a bit later. Fast forward to 2021, Zomato went public. It was one of India's biggest IPOs. And a year later, in 2022, the company acquired Blinkit, the grocery delivery app. This was a complete game changer. Today, Eternal isn't just about food or groceries. It's a complete consumer ecosystem. It connects consumers, restaurants, grocery chains, suppliers of restaurants, and also financial partners. Now, let's talk about what really matters: the money, the numbers. Eternal has changed how they calculate revenue. But to me, as an investor, what's important is how many orders are they getting and the value of those orders. And is the order value increasing over time? The 2 main divisions of this company are obviously Zomato and Blinkit. So let's focus on them. And let's look at their latest numbers in the quarter where they just declared results. Eternal declared results for the July to September quarter, and here are the numbers. As you can see, the order value from Blinkit is a lot larger than Zomato, but this comes as no surprise. If I combine the total order value of both Blinkit and Zomato, we're almost at $2.4 billion. And I'm pretty confident that's going to grow in an upward trajectory in the future as well. Zomato's biggest competitor in India is a company called Swiggy. Swiggy also went public recently, but Swiggy has been in deep losses. Eternal's profit numbers are here. As I've mentioned, they are modest, but I'm not so worried because I'm sure they're going to grow in the future. What excites me as a long-term investor? Well, there's going to be growth in orders, and I believe that's going to translate into higher order values and growth in profitability. Now, let's talk about ownership. Eternal is publicly traded on the Indian stock market. Its founder, Deepinder Goyal, has about a 4% share in the company. That share has not declined recently, and I see that as a positive because Deepinder is also the CEO, and it means he is invested into the company for the long run. So I'm very happy about that. What's also amazing is Eternal is now part of the Nifty 50. 50 of the largest companies in India by market cap. But more on that later. Now let's talk about Zomato's global plans and what happened. At one point, Zomato had expanded to almost 20 countries. These countries include the US, Canada, the UAE, and even Lebanon. And then they scaled back. They got out of almost every single country, except with a small presence currently in the UAE. Normally, I'd look at all of this with a lot of skepticism, but in this case, I think it was a positive move. Why do I say that? Well, Zomato realized that the economics and dynamics of this business was very different, especially in more developed, higher labor cost economies, where because of higher labor costs, the economies of the business were completely different and did not work for Zomato. What I like with Zomato is they quit, and they quit early before the losses widened. It takes a lot of courage for a CEO or a founder to admit his or her mistakes. And in this case, I think a lot of respect and a lot of credit should be given to Zomato's founders and management to agree and admit that maybe this is not the best way for them forward, the international expansion. Now let's talk valuations. Eternal has a price to earnings of over 100, a price to book of around 10. A lot of you must be wondering, hey, this is insane. Why would I buy this stock? This is not normal. And you know what? You're kind of right. But here's the thing. Eternal has only recently started turning a profit. If the profit increases substantially, the price to earnings should come down. Price to book to me is not a very fair valuation for a company that's in services, so I'm not too worried about that. The stock price currently is high, but if it does correct, of course, I will be buying more shares. I'd like to make a disclaimer here that I do own shares of Eternal. For those of you who've watched my earlier videos, you know that I don't really believe in various valuation models. They assume too many things and they're more theoretical than anything realistic. So I'm going to avoid going into that. The other reason I'm also bullish on Eternal is because Eternal operates in a country where labor cost is low, and in addition to that, labor is available. In several European countries, even getting people is a challenge to do these jobs. Leave aside the fact that you have to pay them a high wage. So now the big question. Well, the good news is if one is an Indian passport holder or an OCI card holder or a non-resident Indian, it's a pretty simple and a straightforward procedure. One is able to simply buy shares on the Indian Stock Exchange and invest in Eternal. Now, what if you don't hold an Indian passport? What do you do then? Well, unfortunately, you cannot buy Eternal stock directly, but there are some other solutions. Nothing illegal, so don't worry. Now, if you remember, I mentioned to you that Eternal is part of the Nifty 50. And if you do own a Nifty 50 ETF, you do have some exposure to Eternal. The problem is the Nifty 50 only has, in its composition, 1.5% allocated to Eternal when I checked last. If you'd like to know more about Nifty 50 ETFs, I'm putting a link to the video right here. At this point, some of you may say, hey Niranjan, I'm not interested in a 1.5% exposure to Eternal. Well, good news. There are some other solutions. For those of you who are based in the US, or if you can invest in US-based ETFs, there is one option. The ETF you can look into is the Colombia India Consumer ETF, or INCO. It's a relatively smaller ETF, and it does have a high expense ratio, but it has quite a significant exposure to Eternal. Almost 6% of the portfolio is allocated to Eternal. And if you're living in Europe, guess what? There's even better news. There's an India Internet UCITS ETF, which you can also buy. The ticker symbol is INQQ, and this ETF has an almost 10% exposure to Eternal. Once again, this ETF is small in size and it does have a high expense ratio. I personally would be careful before investing in these ETFs because they're small, they have a high expense ratio, and that means high risk. I'm putting a link to both the funds in the description below. What do you think about Eternal? Do you like the story that Deepinder has created? Please do mention it in the comments below. I'd really appreciate it. Thank you for watching. Bye.